In recent years, the world has watched as trade tensions between two of the most powerful economies, the United States and China, have escalated to unprecedented levels. But what we're seeing now is more than just a trade war. It's a strategic battle for global dominance, where each side is throwing economic punches that could reshape the future of the global market as we know it. Let's dive deep into how these tensions have spiraled and what the latest moves mean for the global economy. The escalating trade tensions between the United States and China have now entered a new and more intense phase. This shift follows President Trump's controversial decision to implement a 10% tariff on a wide array of Chinese imports, marking a critical turning point in the already complex trade conflict. This decision was not just about addressing trade imbalances, but also about strategically positioning the United States in a changing world order, where China's growing economic and technological influence has become a central issue. As China steps up its responses, these tariffs and other measures represent a significant escalation of the ongoing economic war, which has evolved far beyond simple trade disputes. It's now a multifaceted struggle for global power, one that could have far-reaching effects on industries, jobs, technological progress, and even international alliances. What began as a dispute over trade practices and intellectual property has transformed into a complex and high-stakes conflict over global influence, industrial dominance, and technological leadership. Before examining the details of these new tariffs and retaliatory measures, it's crucial to understand the underlying causes and the broader economic context in which these tensions have escalated. The US-China trade war didn't appear overnight. It has been brewing for decades, with China's rapid economic rise in the 21st century challenging the traditional dominance of the US and its allies. From 2001, when China joined the World Trade Organization, WTO, to the present day, the country has transformed itself into a global economic powerhouse. It has become a crucial player in world trade, manufacturing, and technology. However, this rise has not come without its controversies. US officials and businesses have long accused China of engaging in unfair trade practices, such as intellectual property theft, forced technology transfers, and the manipulation of currency to boost exports. These issues were compounded by China's state-driven model, where the government plays a significant role in guiding the economy, often providing substantial subsidies and advantages to Chinese companies, making it harder for foreign companies to compete fairly. These practices, according to US officials, gave Chinese companies an unfair advantage in global markets, particularly in technology, which has become the cornerstone of economic power in the 21st century. This, combined with increasing concerns about China's ambitions in the South China Sea, its technological advancements in areas like artificial intelligence and 5G, and its growing geopolitical influence through initiatives like the Belt and Road Initiative, led to a tipping point. The US began to view China's rise not only as an economic challenge, but as a geopolitical one as well, threatening its long-standing global leadership. In 2018, the Trump administration made a dramatic shift in US trade policy by introducing tariffs on Chinese imports. This move was framed as a way to force China into better trade practices and to curb its growing economic influence. These tariffs, initially aimed at addressing issues like intellectual property theft and unfair trade practices, quickly expanded into other sectors, including technology, industrial goods, and even consumer products. President Trump's decision to impose tariffs was met with fierce resistance from China, which viewed these measures as an attack on its economic sovereignty. This reaction was not just about the immediate economic impact, but about sending a message to the world that China would not bow to US pressure. In this context, the tariff dispute quickly became about more than just trade. It became a battle for national pride, global influence, and technological superiority. The US tariffs were designed to put economic pressure on China by targeting specific sectors that were seen as critical to China's economic strategy. These sectors included high-tech industries, such as semiconductors, as well as traditional manufacturing, such as steel and aluminum, which were being dumped into global markets at artificially low prices due to Chinese government subsidies. In response to the tariffs imposed by the US, China wasted no time in launching its own countermeasures. China's response was not just about retaliating in kind with tariffs, but involved a more comprehensive set of strategies designed to hit the US where it hurts. These included imposing tariffs on key US exports, launching regulatory investigations into US tech firms, and restricting the flow of critical raw materials used in industries around the world. One of the most significant retaliatory measures involved the imposition of tariffs on key US energy exports, including coal, liquefied natural gas, LNG, and crude oil. These are sectors in which the US had recently become a global powerhouse. By targeting these exports, China aimed to not only disrupt US energy markets, but also send a message to the world that it could force the US to rethink its global economic strategy. Beyond tariffs and retaliations, the US-China trade conflict has also evolved into a geopolitical struggle for dominance in global industries. This is most apparent in the realm of technology, where the race for leadership in areas like 5G networks, artificial intelligence, and quantum computing has intensified. The trade war has exposed the deep vulnerabilities in global supply chains, especially in industries where the US and China are both leading players. One of the major flashpoints in this technological struggle has been the semiconductor industry. Semiconductors are the backbone of virtually every modern technology, from smartphones to military weapons, and the US has long been the leader in semiconductor manufacturing. However, China is fast closing the gap, and it is investing heavily in its domestic semiconductor industry in a bid to reduce its dependency on the US for these critical components. At the heart of the trade war is the belief that technological leadership will define the future of global economic power. The US has used its control over critical technologies and supply chains as a weapon in this conflict, targeting Chinese companies like Huawei and TikTok, which it accuses of posing national security risks. For China, technological sovereignty has become a central priority, and the US tariffs and restrictions are viewed as an existential threat to its ambitions. The economic impact of the trade war has been felt not only in China, but also in the US and across the globe. In the US, industries that rely heavily on Chinese imports, such as the automotive sector, electronics manufacturing, and agriculture, have faced significant disruptions. For instance, American automakers like Ford, General Motors, and Tesla have been affected by tariffs on automotive parts and vehicles, which have raised the cost of production and decreased their competitiveness in the Chinese market. The energy sector has also felt the impact of China's tariffs. US LNG producers, who had seen a significant increase in demand from China in recent years, now face tariffs that make their products less attractive to Chinese buyers. This has forced many energy companies to look for alternative markets, such as Europe and Southeast Asia. But those markets are not always as profitable as the Chinese market. The tariffs have also led to higher costs for US consumers, particularly in industries like electronics, clothing, and household goods. These higher costs have reduced consumer spending, which is a major driver of the US economy. Globally, the trade war has disrupted supply chains, particularly in industries like technology, automotive, and agriculture. Companies that rely on components from both the US and China have had to adapt to new trade barriers and tariffs, leading to inefficiencies and higher costs. Additionally, the uncertainty surrounding the trade war has led to volatility in global financial markets, with stock prices fluctuating based on the latest developments in the US-China relationship. China's long-term strategy in the trade war is not just about responding to US tariffs, but about building a more independent and self-sustaining economy. This strategy involves reducing its reliance on foreign imports, particularly from the US, and developing its own advanced technologies. This is especially true in sectors like semiconductors, where China is investing heavily in developing a domestic supply chain to avoid the vulnerabilities created by its dependence on US-made chips. In addition to technological self-sufficiency, China is also focusing on expanding its influence in global markets through initiatives like the Belt and Road Initiative, BRI, which aims to build infrastructure and foster economic development in countries across Asia, Africa, and Europe. Through the BRI, China seeks to build stronger economic ties with emerging markets, reduce its dependency on US markets, and establish itself as a leader in the global economy. China's strategy also involves building a more resilient and diversified energy sector. By diversifying its energy imports and reducing its dependence on US energy sources, China is positioning itself to be less vulnerable to future trade disruptions. This includes investing in renewable energy, such as solar and wind, and expanding its partnerships with energy producers in Russia, the Middle East, and Africa. As both the US and China continue to implement and escalate their trade measures, the future of this conflict remains uncertain. While both sides have expressed a willingness to negotiate, their respective positions have become increasingly entrenched. For the US, the goal remains to force China into better trade practices and to protect its technological leadership. For China, the goal is to defend its economic sovereignty and to continue its rise as a global economic power. The global economy will continue to be shaped by these tensions, as countries and companies must navigate the changing dynamics of US-China relations. Supply chains will continue to shift, markets will adjust to new tariffs and regulations, and industries will be forced to adapt to the evolving economic landscape. In the coming months and years, the world will watch closely to see whether diplomatic negotiations can bring an end to this trade war, or if both sides will continue down a path of increasingly aggressive economic policies. One thing is clear: the US-China trade war is far from over, and its impact will be felt for decades to come. The US-China trade war is far from over. While both countries have signaled their willingness to negotiate, their positions have become increasingly entrenched. The tariffs, regulatory measures, and geopolitical strategies employed by both sides are part of a larger battle for global dominance, one that will have lasting implications for industries, markets, and economies worldwide. As the conflict continues to unfold, businesses and investors must navigate an environment of uncertainty and shifting global alliances. The trade war will undoubtedly have far-reaching consequences for supply chains, markets, and industries. However, it also presents an opportunity for countries and companies to rethink their strategies and adapt to a new global economic landscape. For now, the world is watching closely as the US and China continue their economic tug-of-war. The next few months will be critical in determining whether the two sides can reach a resolution, or if the trade war will escalate further, reshaping the global economy in ways we are only beginning to understand. If you're looking for in-depth insights into how these trade tensions could reshape the world's economic landscape, hit that like button and subscribe to our channel. Your support helps us bring you more insightful and impactful content. Thank you for watching.